Welcome to the Mid-Market Edge podcast, where we uncover operational insights for private equity-backed portfolio companies. I'm your host, Kevin Bonfield, and over the last 30 years, I've had the privilege of working with fast-growing entrepreneurial teams, helping them scale, tackle challenges, and seize new opportunities. On this show, we'll talk to industry experts and seasoned leaders who will share practical strategies to drive growth, boost efficiency, and create value in the mid-market. Get ready for an insightful, engaging conversation that dives deep into the real-world issues facing your business. Hello, I want to welcome Sarah Martin today to the Mid-Market Edge podcast. Sarah is the head of corporate development for Pace Labs, and in her role, she is working through all the way from due diligence on acquisitions through to integration. But Sarah, you can tell the story much better than I can. Welcome. It's great to have you.
Thanks, Kevin. Great to be here. I have been on the corporate side of M&A for the last 10 years, working for private equity-backed middle market companies. Prior to that, I worked in Wall Street half that time and stock research half that time in M&A. And I will say I've really enjoyed my journey on the company side. I think in banking, certainly you learn a lot, but you only see half the process. I worked with a range of clients, generally in the life sciences area, looking for targets, executing transactions. But what we miss in investment banking is the integration, what happens after the deal is done. And I've had the privilege for the last 10 years of oversight of those integration activities at a variety of private equity-backed companies.
That's awesome. So you've seen a whole number of companies that you've both screened and then integrated into the business over time.
Yes, and generally in the middle markets, the companies that I work for are between 250 million and $1 billion in revenue. And so generally what we're looking to do is not only grow our core market, particularly if we're the market leader, and I've worked for 3 market leaders, but also to get into adjacent areas. So much of many of the deals that I've done over the last 10 years have been smaller, founder-owned businesses that added to our networks either through a new geography or a new capability in the case of adjacencies.
Okay, great. So as you're moving through this and you're thinking about how to integrate these companies that you're buying, how do you think about having a high impact acquisition integration plan or capability for the companies that you're leading?
Yep, and it's something I have thought about over the last 10 years. Given that I am not an operator, my background is finance consulting, but yet in the M&A role at the companies of the size I work for, I tend to always have oversight on the integration activities. And also generally, there isn't a well-defined program when I join these businesses. And, it's usually because investors have generally a 5-year hold period. New investors come in over that time period and do acquisitions fast and furiously, usually to roll up a market. And so what I have found is the deal team tends to step away from integration. And because these need to be done quickly, they're handed off to the business team, the operators. And there are instances where that makes sense, where there's a more bespoke engagement or where you don't really want to integrate right away. But generally, the handoff to the business team with no project management, integration project management, can impact value in a real way. And so when I've come in and I've thought about how to build this program and build this team, being a non-operator, I focus on process management and project management and how we can ensure that the business teams, who really are the SMEs that will be conducting the key integration activities, are prepared and have insight into the original deal thesis and the diligence that was completed. Generally, the deal team that is doing the diligence is separate from the integration team. It's smaller for confidentiality reasons. Also, you don't want to bring in a bunch of operators to diligence a deal if there's a chance it may not get done, which some of the time is the case. So making sure that the operators are well aware of what's going on early enough. Generally for small deals, I say that's about 30 days before close, and making sure that in diligence, we have identified where there could be risks in integration and making sure that there is a plan, a very detailed activity plan around each of those risks, and also playing on our own experience. A lot of these companies have operators who have been at least at the business or in the industry for 2 decades or more. But integrations can be complex. They're on a different timeline, and we need to make sure that we balance, the needs of the deal team and moving quickly with the needs of the SMEs who will have to integrate thoughtfully.
Yeah, and I love that thought process of we've got due diligence going on, but you want to bring the integration team in during that pre-deal phase so that they can see what's going on with the deal and then be ready for the integration once day one happens. Now, when we talk about a high performing integration capability, you're thinking about it through a process and a program lens. What are you looking to put in place to make that high performing capability hum?
One, knowledge transfer is the first thing, making sure that you have the right team assembled. So I'd
Mm,
say my point for each of the functions, which include IT, HR, finance, and then the business functions, commercial and operations, have high performing team members. So these are people that can deal with complexity, can work under pressure, and can solve problems. Every deal is different in some way, shape, or form. Every deal does pose challenges. You can be as prepared as possible, and something will still come up during the integration phase. Somebody may leave the business that we didn't expect. Sometimes there's other HR challenges. We have higher attrition than we thought and need to backfill. So that being said, you won't solve every problem with planning, but I think you will preserve the value of the deal with proper planning. So it's having the right team together. It's making sure that you have set goals and really define the metrics that are needed to achieve success. I think too many times I've seen integrations that get passed off to the business, and everybody just gets up and does their day to day. IT gets up and does what they think they're supposed to do. Accounting gets up and does what they're supposed to do. And sometimes there's not a lot of cross functional discussion because there are impacts from one functional area to another, particularly in operations and IT, where you have systems integrations, making sure that we come together as a team and discuss cross-functional challenges and solutions is important, and making sure people aren't siloed. Where I am now, I have the pleasure of having the requisite resourcing I need to be able to conduct a successful integration. We have dedicated points in finance, HR, IT, quality, and environmental, whose most of their job is to focus on integration, given the number of that we're doing a year. And then an overall project manager who has done integrations for the last 20 years, done project management for integration. So I think having that oversight and dedicated personnel who understand their roles and responsibilities and often participate in diligence. So sometimes the deal team, which is sort of the upfront diligence team, can be different than the integration team. But I tend to use the same people because I have the luxury of doing so because they're dedicated. So the more they know up front, the more successful integration will be. But that can't always be the case across middle market companies. So I think continuity is important, planning is important, tools are important. So I used to work in a world of spreadsheets where everything was in Excel. Compliance was difficult for a lot of the team members who have, day-to-day activities they have to get done, and integration sometimes may be an extra task for them to do. But now we're moving into better tools, utilizing what's available in the Microsoft suite, utilizing what AI can help us with, so it doesn't seem that mundane. But at the end of the day, it is very tactical, and there are hundreds of activities that need to be completed over a certain time frame with dependencies that you're never going to get away with having a detailed project plan and making sure people are executing against that project plan.
I can't remember the last time I heard somebody who came from the finance world saying Excel doesn't work for this function. I mean, that this has got to be a first, Sarah. I love the comment early on about finding the high potential or the high performing individuals to be a part of the integration team. Because one of the things that I see is integration is an extra I've got to go run the business. And now you're asking me as an operations team to go and do the integration as well. And the last thing that I want to do is give you some of my best people because I've got to run the business. But you're right. If you don't find these people who can understand complexity and deal with these kinds of problem solving issues, then you're creating more operational issues for the future.
Right. And it is a unique person that can do this. You know, people on Wall Street are trained to do this. We're trained to execute, solve problems quickly. We're always under pressure. That personality type doesn't necessarily exist within companies that, have more routine operations. So it is sometimes challenging to find people that can sort of handle the workload. Where I am now, our business is completely comprised of acquisitions. So we've been doing acquisitions for 50 years. We have never opened a location organically. So I think that drives some of our workforce's interest in working with me on acquisitions. Not always the case when I work for a platform and then acquire into it. And that's why the role of HR in identifying high performers across the company is always important. So I'm looking for up and comers, people that want to rotate into our team on a temporary basis, perhaps, a year or 2 years to come learn what M&A is all about. People tend to really want to work in M&A. Not everyone knows what it is how difficult it can be. So I think it's important for companies to probably give high performers a chance to work on teams like this. And it only help them as they, work across the organization and are promoted up through the ranks.
Yeah, I mean the opportunity to see a business from end to end rather than just being I'm deep in my silo or my function. To be able to see how a business connects from the front to the back can be hugely valuable for somebody's career into the future.
That's true. And where I am now, we tend to have leaders who work in sales and then move over to operations and vice versa. And I've worked with some of those team members on integrations, and they have great insight into where there might be operational challenges, even if they sit in a sales role and their job is to call on customers once we acquire them. And so that's important too, I think, for the team dynamic, is to have people that have moved across the organization in different roles. We have the same thing. We have somebody from quality that's moved back into operations. And so, integration teams need to be nimble to be able to get our work done. And so therefore I try to kind of keep the number of people on a particular call to, 5 to 10. Otherwise we'll never get through our updates in, a 30-minute biweekly touch point. And so people that are really cross-functional by nature of what they've done at the company are hugely additive to being on the integration team.
Yeah, exactly. The other thing that you were talking about was finding the right metrics to be able to see how the integration is proceeding. Is it on track? Is it off track? Maybe you can talk a little bit more about that.
Sure. And I'm glad you asked the question because it is the most critical area I have been working on, particularly in the last couple of years. But, in most companies, I think integration success is judged by financial performance. And while that is an indicator, I know firsthand that if I wait until the monthly numbers or the quarterly numbers are out, if we're underperforming, we may have had an early integration issue that if a customer left us can't really be solved. And so I've been working with our team to define what we need to understand or diagnose upfront, early days, early weeks, to make sure that we aren't underperforming a quarter later. Now, sometimes underperformance happens. You don't have a crystal ball when you're putting your forecast together 6 months before the deal closes or 3 months before the deal closes. But I look at issues in integration as predictable and not predictable. Someone quitting that we didn't expect to quit, probably unpredictable. Predictable could be, did everyone get their IT licenses day one? Did everybody on site have a laptop so they could use our lab information management systems? But I think top of the list would be customer satisfaction ratings. So rather than waiting until a customer leaves us and it shows up in financials next quarter, we know within the first week that they left, why they left, if they're having issues, that we can solve them before they leave us, that we have touched them and communicated appropriately and let them know who to call. A lot of the softer stuff that may not be as quantitative, although on our biweekly updates, we do talk about things like, have all the customers been called? If they didn't answer, what's our next best action? Did somebody do a check-in in the first 30 days? Are they already a customer within our network somewhere, and perhaps a different account manager should be calling on them? So those are the types of things we talk about early on, I should say, predictive metrics. I'd say on the operations side, again, if we have challenging integrations, whether it's how to do business within the site or it's IT integration that sometimes can take longer, we can wait till those things are done. But if they're not done appropriately and we don't have the right communication to the staff, then we can see that show up in underperformance. So the sorts of things that we're looking at early on to determine predictive performance is whether SOP adoption rates, what the SOP adoption rates are, what the workflow adoption rates are. Especially in the middle markets, generally we're buying smaller businesses. We're rolling up an industry. Smaller businesses, at least in the industries that I've worked in, have been founder owned. They have employees that may have never had another job, and they may not have gotten the training that you would get at a market leader. So of the 4 private equity backed portfolio companies I've worked for, 3 have been the market leader. And so therefore, we should, and we do have standards and ways of working as a larger business, particularly because the regulatory requirements are more stringent for somebody like us. And so when we go into these smaller businesses, I think training is important too. So we can't just buy the businesses and expect them to have turnaround times or produce work deliverables to the standard and at the speed we do without giving them a lot of support and training. So I consider that a very important predictive metric, as well as employee surveys. So, I tend to do an employee survey 90 days post-close with some touch points in between. Did you feel supported? Did you get the training? Do you still have trouble with anything? How can we help you? Because without that, you may see employee attrition rates go up and work suffer if people feel overwhelmed by new processes.
Yeah, the idea of having SOP adoption as one of the predictors of, is this going to be successful? I mean, that's very much on the front end, right? The downstream impacts of that showing up in EBITDA could be months later rather than right at the time that you're testing for that predictive measure.
Exactly. I'd say looking at financial performance by site is important too. Often when you're buying small businesses, they can get rolled up, the financials can get rolled up in the overall platform business because they're not material. But what I will say is if you're acquiring, we acquired 9 businesses last year, we could probably acquire that and more on an ongoing basis as we scale the program. If you don't look at the metrics at an individual acquisition level, financial metrics and predictive metrics, then what you may have at the end of the day is a lot of small businesses who may have been underperforming because of some of these integration issues that got rolled up so their individual performance wasn't noticed. And then you have ongoing operational problems over time that will start to impact the platform. So, I've really pushed to look at, even if it's only a couple $100,000 of EBITDA in an acquired business, that we make sure that we are on track, even if it's only plus or minus 20,000, because I think catching issues at that point can also help our organic business improve their operations as well.
Yeah. And the other piece that you talked about was the regular check-ins with customers, not just, hey, by the way, we bought the business. Great. Thank you. But actually doing that on a regular basis to see if there's a change.
Exactly. And we do, as a company, voice of customer interviews. Now, those tend to be once a year. Those focus on corporate accounts. And what I'm looking for on the integration team is for us to mirror that kind of work. Can we check in and who should it be? Because it may not need to be the account exec on that deal. It could be the head of integration. I've offered to make calls myself, although as the deal person, if they have business challenges, I probably can't help them in the moment solve those challenges. But again, we are all here to represent the company and serve the customer. So I've said whoever the right person is to be making those inbound calls to make sure customers feel supported, let's make sure that we're having them have those regular check-ins and understand where we may not be serving the customer as best as possible. Let's elevate that. Let's discuss that on our integration biweeklies. And it could be an operations issue. It's not always a sales issue. It usually is, what we're doing in operations. It could be IT. They don't like logging into a different kind of portal. They don't know how to navigate it. So that's why it's really important to have a cross-functional team look at any issues that customers are raising.
And do you, when you're talking to customers and you're getting voice of the customer feedback, how frequently are you looking at that? I mean, I see companies who will do I'm going to talk to everybody on day one or right around the deal close, right? But then it kind of immediately goes into ongoing operations versus keeping those touch points. So how do you view that?
Yeah, so we have attempted to at least reach out to top customers day one. Now, we sometimes acquire 100 or 150 customers, and so not practical to reach out to all of them day one. So we try to touch all customers month one and then have a check-in along the way. Now, I think it's important for our sales representatives to have a pulse on operations, to know, because operations and our project managers who are on the front lines of doing the business and delivering results are the ones that are going to know whether a customer is unhappy. And so therefore, I think it's a team effort between commercial and operations. I also think that, when you're looking at 90 or 180 days in, that's when you could probably do a little more formal surveying of customers. But so far, so good. I think the real risk is missing a customer. If we bring a new customer over, so they don't rank in the top 5 or the top 10, and we don't reach out to them, that's where we're more at risk of losing customers. And I think this has been heightened under our current integration practices because losing anything on the top line, destroys value immediately.
It does.
And understanding really how to preserve customer relationships, especially when you're the market leader, is important.
Yeah, those customer conversations, sometimes it can feel like it's a little clunky, right? Hi, I'm the new person, and or it's an existing account manager wanted to let you know that this is going on. At the same time, I see these as an opportunity to actually talk about where the relationship is, what else are you looking for, what else can we do for you, and sometimes it opens up a much more interesting strategic discussion.
True. And because everybody talks about cross-selling, that's where you get ideas for cross-sell. I'd say in the last couple deals that we did that were a bit larger, I made sure that we had a script for our salespeople. Not because they need to be scripted, but because we learn things in diligence that may be important to customers that somebody who wasn't involved in the deal at all may not be aware of. I then work with, before we close, the GM of the acquired company to say, here's the communication that we are going to provide your key customers. Who do you think should be on the phone with us? What do you think we're missing? And I'll tell you, a huge light bulb went off when a GM said to me, it's not necessarily the salesperson that needs the script. It is the project managers. So, day 2 after the transaction, customer A is going to be interacting with my project manager. They may not have answered the phone yesterday. You may not have tried to call them yesterday because they're not a key customer. And now I have a person that's a representative of the buyer interacting, and that is a chance to have a dialogue. So make sure that they're prepared with their messaging. And they're not necessarily, account execs that do this easily, right? They're doing the work in the lab. And so that was a huge learning for me to make sure it's not just salespeople that need to be prepared, but it's all of us. And so I think that, making sure that you understand the stakeholders and that you're really asking the acquired company what the watchouts are, because they know their customers better than we do. And I think walking in thinking that you're going to put your name on the door and that we're here, we have name recognition, we're the market leader, can fall short. And so, we spend a lot of time thinking about customer communications well before we close.
Yeah, the idea that the project manager is one of those key touch points. I tend to think that customers, when they move from, when they're working with a company that gets acquired, one of their big things is just, okay, well, who do I call if there's a problem? And often project managers are the kinds of people who are problem solvers, and part of the communication is, hey, look, if you've got a problem, just call me and I'll work it out for you. That kind of confidence is likely to keep them as a customer longer term.
Yeah. And these are basics, right? What you and I are
Yes.
talking about are very small things that often get missed when you have
Mm.
an investment banker, deal person who's running the deal and then has to oversee integration. Somebody like me, if I had to do this without a team, I would overlook some of these details because we're trying to close the deal, we're trying to get the model completed, we're trying to get money wired out. And there's so much that you're finishing up until the line when you're trying to close the deal that if you don't have a team with you thinking about these exact details prior to close, you're going to miss it. And it's probably very easy to upset a customer by
It
not
is.
communicating with them appropriately. It's like planning a party and you need all the details in place. And that's why you really need an operating team that complements you on the integration side that isn't dealing with all the minutia of, the legal and the agreements and getting funds teed up to wire out. That are thinking about the intricacies of a customer while I'm thinking about, how to get the final agreement negotiated.
Yeah, but you're right. It is those details. It'll show up in the spreadsheet, right? Oh, we went from a 3 to a 5% churn and destroyed all of this value. But those details make the difference between the 3 and the 5%.
Exactly. And it is easy for finance types, and I include myself in that, to put a spreadsheet together and say we could grow 5% because historically we did grow 5%. But really, the difference between 0%, 5%, and 10% is every single detail that goes beneath there. And so when I work with the integration project manager, we talk about, kind of the big buckets of projects and concerns. Those all map back to the risks that we may have identified in diligence or risks that we have lived through from prior integrations and integration experience. But within each of those big buckets of activities, there could be 100 small details, and making sure that someone has the experience and the insight and they're detail oriented. So they're looking at those activities, prioritizing them, and working with the other team members. I think, people that work on the deal side are used to the time pressure and the complexity and making sure you've got a tracker and you've checked off the list. People that don't work on the deal side may not be as attuned to that. And that's what I want to make sure, our IT representatives or HR representatives, very good at what they do, right? Very good with people, very good with systems. I just rely on my project manager to look at the activity list and the big buckets of risk and make sure that people have gotten their work done, because it's very easy for something to slip through the cracks in integration. And that's, we're only as strong as our weakest link. And so at least the integration project manager is intended to be a backup, could be a pinch hitter kind of helping IT or helping HR, finish out their bucket of activities. So I think we really do see this as a team effort and try to have it not be siloed, because I think that's where people can overlook some of the details that are so critical to driving value.
Yeah. Now, one of the things that I wanted to talk to you about is, because you do so many acquisitions that you're integrating, you're building that capability and getting better and faster each time, because you've got a number of these to learn from. Some platforms might do 3 to 5, but they're still learning when they get to number 5. You've done significantly more than that, right? And so, what are the kind of things that you're seeing that have improved in your integrations as a result of starting to think about this as a capability? Like a lot of companies will say, I need to get onto the financial system, so I've got one view of what's going on with the financials in the first 30 to 45 days. Tell me about how you've built the capability so you can move faster.
Sure. So I've been in this current role for a year and a half, and in that time, we have put a integration playbook and process in place. We've really worked with the functional and business SMEs on how to phase integrations and phase, I should say, priorities, really. This team that I work with now can get the financial systems integrated within a week. usually. So we can start reporting out financials immediately. I haven't had that luxury in other places. Sometimes it takes a month, sometimes it takes 2 months. But because we have an experienced accounting team and they have done, probably 50 to 100 integrations, they know how to get in there, get the data they need. They also know what to request ahead of close. So once we finish diligence, I guess the other big learning here too is that I've separated out what we consider diligence and what we consider integration preparation, because I don't want to waste anybody's time. So we don't do integration preparation week 2 after kicking off the deal. We've got to do, when we're doing diligence, we have to focus on the financial results, making sure that the EBITDA that we bid off of is as it was presented. Understand, in some industries it's quality, in some industries it's compliance, understanding risks in that regulatory area, and then understanding kind of the commercial engine, because that gets to what we're probably modeling as our revenue synergies. Kind of once we get through those key steps, and then we follow on with legal diligence to make sure there aren't any, show-stopping legal risks. And we've approved that through an investment committee, which is generally the CEO and the CFO. This is what we presented. This is what we diligence. This is what the financials look like. Are we all still comfortable given the information we've learned? Assuming we pass through that phase, which can be very quick, that could be in 3 to 4 weeks, then we start integration planning. So that's when we bring in finance, IT, to say, okay, what do you need to make sure that week 1 and month 1 are smooth? And they know what to ask for. I think in some cases, with companies that are less sophisticated or experienced in integrations, none of that preparation is done usually till post-close. Big team of people go on site. That's when the discovery happens, and that's where it becomes clunky and creates risk. So we've got a very accomplished team that kind of comes in, knows when to ask their questions. Prioritization is important. They put their plans together, and we discuss it as a group. Sometimes financial systems integration could impact IT integration. Oftentimes, IT integration needs to be closely married to operational workflows. Training is a part of that. So really making sure that everybody knows what the plan is and that we have a coordinator on top of that, because some of these small businesses can't handle 15 of us showing up at integration. So making sure that, the critical people are there day one. Usually it's HR and IT and the integration project manager. And then we layer people in after that fact. And anybody that can do work away from the new site week 1 or week 2 is encouraged to do so we don't overwhelm.
Yeah, no, that's good practical advice there. And the piece that you're talking about, this kind of, because I've seen it with some companies where there's this weird position that's a few weeks before close, where some new people show up and there's a bunch more questions, right? And they've got deal fatigue because this has been going on for months, and you almost want to communicate, no, we know that this deal is going to close. Now we're just working on what the future is. So this should actually be a positive set of conversations, not a whole bunch of new questions that are being asked. And I think it's challenging to communicate that piece so that people know that this is a positive move, not a negative one.
That's a very good point. I almost always work with a founder who's never been through a transaction before. It's a very emotional experience for them. My most recent deals, they're retiring. This has been their entire life, is building this small business. This is their family. And so deal fatigue is real for them. And so, I consider it my job to make sure to handhold them through this process. And when we get to the end and they don't want to answer any more questions about the employee census or, IT integration, I am there to say, this is for the benefit of your employees. And I think we have been successful in getting owners comfortable, but you're right. You can't just hit them with a list of 150 questions day 1 and then hit them with another 100 questions day 30. So even though I am not an operator by training, I do look at every question that goes over to them. And I think about what it would be like for me to be in their shoes. And because I've talked to so many small business owners over the last 10 years, I know what they're feeling. And I think I can get them over the line and just tell them it's a few more days. But I think, it's a testament to having a trained team. And that's where the selection process of who sits on the integration team is so important. And, to work in concert with us and have them really think like deal people, think about, ruthless prioritization. And sometimes I look at the list and say, is this really a day one question, or could this be a week 3 question? And we kind of map it back to risk. If the risk is we'll have an employee that quits, people won't understand SOPs, we won't have training in place, then yes, to me, that's a day one, week 1 thing. If this is we want to roll out our performance management program, to me, that can probably wait till day 30 or day 60. So I'm always kind of working with our business teams to make sure we don't overwhelm and that we get the buy-in of owners. But, more importantly, their employees are going to be our employees post-process.
That's fantastic. So, Sarah, this conversation has moved very quickly through our time together. So I've got one final question for you. Given all of the experience that you've gathered, the expertise over the last, as you were saying, the last 10 years of working across these 4 PE-backed companies, if you were to take the knowledge and expertise that you have today, how would you have changed what you did 10 years ago? What's the biggest learning that you've had as you've been going through this process that you would apply to the beginning?
Great question. And I think about this all of the time. When I started, I had left Wall Street. When I started in a corporate development role, I had been an investment banker. It took all of me to get my first deal done. It was a cold call of a company in Ireland that I found in Cap IQ. And I was so happy once this deal got done. And I handed integration over to operations because I thought, I'm not a business person. I don't know anything about the business. Operations can handle this. Well, then what happens is the person that's reporting out on financial performance at board meetings tends to be me. And when you're detached from the actual integration process, it's hard to explain what the negatives and the positives are. And so over time, I have now adopted kind of the oversight of the integration function. It can be very time consuming. You can get in the weeds and get into minutia about things that are not your core expertise, IT being an example of that. And so I think, taking ownership of it, learning where you can, and making sure that you have a true project manager that comes out of operations to lead integration has been helpful and really does, at the end of the day, drive the value that we articulated when we walked into the deal and what we monitor as we, kind of move on after deal, a quarter, 2 years on. Because at the end of the day, when we transact, we will have to talk about our M&A program and how we as a platform drove value. And so that is the day in and day out of the integration function. So I think it is important that it is at least closely tied to the M&A deal function. And I think oversight matters. And I think ownership matters. And so I do hold myself accountable for integration performance, even though technically I'm not the owner of those P&Ls, but I think a strong partnership is what really ultimately will make these deals successful.
Yeah, and that strong partnership, the finding the high potentials to work on it, the predictive metrics to say whether you're on track or not. This was a fantastic conversation, Sarah. Thank you so much for appearing on the Mid-Market Edge. And I'm sure that there's nuggets that I didn't even summarize that people will come to as well. This was awesome. Thank you very much.
Thanks, Kevin.
Thanks for tuning in to the Mid-Market Edge podcast. For more information, visit the Mid-Market Edge website at midmarketedge.com. Details are in the show notes. Remember to subscribe and like the show so you'll never miss an episode. And until next time, keep building your edge in the mid-market.